Eric Muathe, Muathe.com, as a follow-up to the video I made yesterday. And we're going to take a look here at a follow-up video. We're discussing the power of RSI moving back about 69.1. I'll keep this one brief, but the concept here remains the same. We just want to take a look at another example here that should actually help cement this idea, where we see the RSI moving above 69.1 tends to be a nice place to re-enter a momentum name. So let's take a look at that idea or that stock. And here's a stock. It's another Indian candidate or Indian instrument. Stock has been doing well, coming off the lows in 13. Nice run from 50 all the way to 475. Now, always good idea to see why it suddenly exploded. We go back and take a look at the minimum requirements, and I can assure you they are met even without looking at it. Talking about this time frame here, what we are looking for is a period where the price breaks out. So there is a price breakout, we can even call it there. Price breaks out, and again it's the same time period. So this time period here, we got minimum requirement, price breaking out, RSI moving to 3-year highs, plus you can see the MACDs, or at least one of the MACDs was also moving to 3-year highs. So always good to check that so we can keep reinforcing this idea of the ultimate Muathe breakout. So meets the minimum requirement, and again take a look at price here. We're talking about this breakout. Since that breakout with the minimum requirements met, we can see that the stock has never looked back in essence and has had a major run. Now we're talking about the concept of 69.1. Let's test this idea. So whenever you have a good instrument, it's moving, pulls back a little bit and moves back again above 69.1 as it did here. This was a good entry, and of course that was a successful entry level. We see here failure, and it's good to point this out. It moved above 69.1 during this month here and subsequently failed here. So that's a failed signal, but the stock was not done. It came back and recaptured the level back above 69.1. So talking about this period here, which corresponds with this entry here at about 270, somewhere in that range. And since then the stock has gone on to explode. So we can see, if we take this example, we have two instances where that worked like magic. Re-entry here above 69.1 here, you get out of that position during this move back below 69.1, so you get out of that position somewhere here. Still, that's a huge gain, more than, let's call it about 100% gain. So we're talking about this period from here to here. I even call it there. It's approximately 100% gain, and all we are doing is insisting that once it moves above and reclaims the level above 69.1, we can go long and get out once it moves back below it. And then there was a period here of a failed re-entry. We acknowledge that, so we had a slight gain and then got stopped out pretty much with no loss. And then there's another re-entry back above 69.1, and as of right now we haven't seen the stock move back below 69.1. So assuming you went long based on the 69.1 principle, you would be long the name since the entry somewhere here. Okay, and you can see that you would still have reason to continue holding. You hold this until such a time as the RSI moves back below 69.1. At that time, prices should be well above where they are trading right now. I always like to reinforce the idea of breakouts. So let's consider the most recent breakout, and we're talking about this breakout here because that's how we learn, by observing the same thing occur over and over again. So we can see here price breakout, RSI moves above 69.1, which is one of our minimum requirements, and we can see that both MACDs move to 3-year highs. So even the most recent breakout met the minimum requirements, and which might be, from a technical perspective, one of the reasons why this stock has done well in 2016. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. Blessings. Riches, blessings.